Hello everyone, it is the top of the hour on Wednesday, June 25th. Welcome to today's cryptocurrencies update. It's the final countdown, one last fifth of a fifth wave. Let's have a look and always be wary of subdivisions. All right, so let's see if we can nail this little sucker. First and foremost, this is something I really wanted to stress with you. This is from Frost and Prechter's book on the Elliott Wave principle, key to market behavior. Now I'm going to paraphrase this. I know you're not supposed to read the slides, but let's have a look at it. So Elliott Wave principle is the best forecasting tool in existence, bar none. It is really one of the best. All right. It is, however, not primarily a forecasting tool. It is actually more a detailed description of how markets behave. That is what the blueprint of Elliott Wave is. In fact, how whole of humanity, and sometimes more so, behaves. If you want to dig a little bit deeper, please read my book, Tomorrow Happened Yesterday, if you want to learn more. Nevertheless, this description does impart an immense amount of knowledge about the market's position within the behavioral continuum, and therefore about its probable ensuing path. Remember, we are tracking the probabilities of possibilities. When one door closes, two are open. We go through one, two more, etc., etc. It's a never-ending puzzle until the market stops. So the primary value of the wave principle is that it provides a context for our market analysis, right? We do just more than counting waves, technical analysis, sentiment analysis, these type of things. Now, I haven't shown sentiment in a long time, and it's going to be maybe a long story because the charts are really not that much different from they were on Monday, but we provide this context, all right? This provides a basis for disciplined thinking and a perspective on the general market position and outlook. Are we in a bull market, a bear market, one wave lower, one wave higher, if-then scenarios? So at times its accuracy in identifying, even anticipating changes in direction is almost unbelievable. Remember, after 5 waves down, expect at the minimum 3 waves back up, okay? We have our fantastic, unbelievably precise if-then scenarios, which we're going to go over in a minute. So many areas, as I mentioned before, of mass human activity display this wave principle. Unfortunately, it is still not an acknowledged field, for example, in psychology or sociology. Interesting enough, it's kind of still dismissed. But what you don't understand, you shouldn't be dismissing. What you don't understand, you should study, so you can understand it. It's like your enemy. Study your enemy, and eventually understand him, and he will become your friend. Because if you understand, you'll be a friend. It's most popular in the stock market, but of course also in cryptocurrencies. So based on the Elliott wave, we had these parameters to look for: 5 waves up, higher highs, higher lows, breakout above critical price levels, resistance must turn into support, etc. So we clearly have Elliott wave in it, as well as technical analysis. We're all tracking this. None of it has happened. We haven't gotten above 23,000 in Bitcoin. We haven't gotten above 12,000 of 1,250 for Ethereum. Stabbed its head above it, but no close, etc., etc. So these are the fantastic parameters you can get using the Elliott wave or within the Elliott wave. So with that, I think we have a nice frame to go and have a look at the charts. All right. So please always remember the context we're in. This is Avalanche, AVAX. Avalanche still appears to be in a, I would say, ending diagonal wave 5, ideally targeting $10 to $5. I've said this now for, I don't know, months, since pretty much May. So nothing has changed. We need to break above resistance. We tagged resistance at about 22.5 earlier this week, and you can clearly see how beautiful the Elliott wave is. We need to get above it. So you have technical analysis and Elliott wave. And so far, we still have this potential to reach $10 to $5. It's still there. I see no reason to change my point of view unless we break above initial resistance. And then we have some more resistance levels before we can even start considering a bigger rally. Okay, so please keep that in mind. So honestly, one's first level of alert is the 22.5. Speaking of alerts, if you want to have daily alerts, don't want to wait a day on my updates, please sign up for my crypto system trading alerts. We do all these major cryptocurrencies. We also include now GBTC, ETHE, I would say ETFs between parentheses for Bitcoin and Ethereum. Every single day, you get to know if you should go long or short, where to place your stops, when to take profits, all these good things. You don't have to have second guessing. You just execute, which trading is. This is an interpretation of the charts. So bottom line, we're below resistance. Until then, it can still go to $10 to $5. Binance Coin. Binance Coin would still look nicer with this final wave 5 of CO4 to the downside of around 160, 180. Prove me wrong. Again, the first warning for the bulls that this will happen is below 209. I would still prefer that. That would look so nice on the charts. It would really. We break above 260, then we have to admit that there might not be this wave 5. I say might because we're then still not out of the clear, because the bearish cutoff is of course at 340. And then this whole subdividing red wave 5 is off the table because we need to stay below the end of wave 4, which is of course the start of wave 5. As always, after 3 comes 4 and after 4 comes 5. If you then start to see these higher highs and higher lows, then you know that this 5 is over and we're in the next phase at the minimum of massive large counter trend rally. So first things first, below 209 targets 160 plus or minus 20. Above 260 targets 340. Trend line resistance of course as well, but it's a target. It's not set in stone. As I showed you on the first slide, right? We're dealing with probabilities and possibilities. So that's the first target. We need to break above the trend line, of course, to suggest that this whole decline that started in November last year is done and dusted. Then it can still turn into only a 3-wave bounce that can challenge the all-time highs, etc. We'll track it diligently. Doesn't mean necessarily the bear is over. We can always subdivide. After 3 waves lower, expect at the minimum 3 waves back up. This sets realistic, solid expectations. It turns us into highly trained traders and not pigs that are going to get slaughtered. Okay, that's what we're looking for. Bitcoin, same deal here. Question mark 4. I prefer it. The warning level for the bulls, as said yesterday, was below 19,500. Around that level, we got to 19,844 today. We break below it, we can reach 12 to 17,000. With 17,000 really, really preferred. I really like to see actually this step lower because it would make for such a picture perfect Elliott Wave Count. And then we're going to start to reassess again. If we're going to get a new impulse higher, we'll have to see how things react. Back above 23,000. That's the first warning for the bears. Then etc. 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 The whole bearish cutoff level is at 32,500. Okay, so we're still miles away from it. Okay, still miles away to say from an Elliott Wave perspective, this rally to the downside is over. First warning, that's the case, is when we start breaking above 23,000. Okay, so we're still in the same predicament. I cannot tell you which one it is with all certainty. I would prefer really one step lower, would be really fantastic. Once we then complete this potential wave 4, remember it needs to stay above 13,800. If it drops below it, then it is a cycle 4, and then only one last big rally to the 100,000 plus is left, which is a cycle 5, and then we go into a serious, major, long-term, multi-year crypto winter. But we're not there yet. Okay, we're really, really navigating these final countdown 5th waves. All right, still looks corrective here from last Saturday's low. Looks like an ABC, so I stick with this wave 4 high here made 3 days ago. Below 1,030 on Ethereum, by the way. This is Ethereum. Below 1,030, and we can target 850. Okay, if we get back above 1,250, you see we tried. This is of course resistance. We tried 3 days ago, but we need to close above it, right? That is when we turn resistance into support. We tried, hasn't happened yet, so all back to bed. Matic would also look much better with this last wave 5 to ideally about a cent plus or minus a little bit. Doesn't have to. What I like is that we're starting to see more and more positive divergence develop, but we need to see a reaction. And of course, a break above this downtrend line, as I've said many times before, is when we really can start to say, okay, the downtrend is over. Right now, I cannot tell you the downtrend is over. If anything, a final wave 5 would look nice which fits with Ethereum, which fits with Bitcoin, which fits with Binance Coin, which fits essentially with Avalanche. So all of them are aligning nicely. Also here for Solana. Solana could technically be complete, but I don't have the indication yet. We're right here at support. Okay, needs to hold. If we break below 34.5, then the first step that we were tracking, which was where we see 5 waves higher, see higher highs, higher lows. It has happened on the micro scale, but not yet on this larger multi-day to multi-week scale. That's what we need to see. If we lose 34.5, kind of right around it, then this downside target for this wave 5 becomes realistic. We break above 50 and then above 60, which will bring us back above this massive downtrend line. Start to look for a big fat bounce into at least the 150s, in my humble opinion. To be determined, but that would be a nice rally into previous resistance and support. So that's really all I have for today. So quite simple. Again, tracking 5 waves up, don't see it yet. Higher highs, higher lows, not there yet. Breakout above critical price levels, really not there yet. Maybe except for Solana, but it fell back already to it. So it can be false breakout. Resistance must turn into support. Same deal here. Solana is pretty much the only one who got a star on its report card. Everything else is all an F, right? Because we haven't gotten there yet. We want to see A's and A pluses. That hasn't happened yet. And please read this about the Elliott Wave principle. What a fantastic tool it is. It's the best tool out there. It really is. You can nail really fantastically what's going to happen next scenarios beautifully, whereas everybody is out there in the dark or dismiss this as some voodoo stuff. But that is their problem, not mine. It's the limitations to yourself. You shouldn't put them. You should accept that there's these fantastic tools out there. I can really not stress it often enough. All right. So with that, have a look at the charts. They will be sent out, of course, with this update. And I wish you all a great rest of your day. Hopefully we'll get this downside. I really hope so, because it really would nail this Elliott Wave Count very nicely. But always be wary of subdivisions, right? Once we start breaking lower, we're going to set the same parameters again, but of course we're going to move them lower. We need to see breakouts, etc., to really tell us that this final 5th wave has completed. Can't see it yet. Nothing confirmed yet. So let's see what we're going to get on Friday. Take care, trade safe. See you all on Friday. And if you have any questions in the meantime, please email me and I'll gladly answer.